Okay, good morning. Wednesday, August 7th, market analysis, Stan Ehrlich. I start out with the indexes for 5, 6, 7, 8 minutes or so. Most important items, the overall market direction. And futures next. And then sometimes a variety of other things, cycles, sectors, forex, crypto, a variety. Now, as you guys know, I have been watching this market for weeks and weeks for a turn down. As it started to turn down at middle of July, I began to talk about an earlier than usual, beginning of the decline into what is frequently the October lows. Only 3 times in the last since 1997, has the market not made some sort of significant buying opportunity in October. Sometimes they're not that big a deal. They don't rally for very long or for very far. Sometimes it's a whopper, like we saw the bottom of a bear market, the beginning of this bull market in October 13th, I believe, of 22. October 23, another great buy signal. I think it's easy to show it to you right here. Oh yeah, October 27th. That's it right there. And how about that one? A bullish engulfing ER buy signal October 13th of 22. The bottom of the bear market and the beginning of the bull market we're still involved in. Oh, by the way, this bear move, which started July 27th of last year, that's interesting, has bearish engulfing ER sell signals involved in it, similar to what we have just had. And strangely enough, July 11th or 12th, whatever, bearish engulfing sell signal, not necessarily the top of the market like we did get in the NASDAQ NQ and the YMDIA. Both of them, we got the top of the market. So this is coming down, in my opinion, to about 5,000. Is that about right? Yeah, at least. And maybe even down to 48.75. That would be my significant downside objective at this point, but we're bouncing. After the market has come down now for a couple, 3 weeks, and let's rescale some stuff here real quick. And good. Now, we got oversold. Reason for a bounce. And we're bouncing. Fine. Boy, it's not much. We barely got above the high of yesterday and the day before that. We've had some huge down days, one of them the biggest in 2 years, according to TV, and I believe it. So, damage is done. In order to get into a bull trend again and make new highs for the whole trend, you probably are going to have some kind of huge reversal and or base building time span bottom built. Now, not necessarily in October, because oftentimes those are just reversing and boom, turns around and goes straight back up. But we'll see. One of my expertise is to call these turning points. ER Signals helps me a tremendous amount. I've worked on this for over a decade. This rally I don't trust. I think it's already over. Today's high is probably it. Maybe in the next few days, we could get up to the resistance area, call it 54, maybe on the E-mini 54.30. That's it. This is the short-term 1-minute chart. I see I'm missing some data here. I'm sorry for that, but it just simply came right back down and is making new lows for the day. I hope I don't have that problem on some other charts. The rally in the spider is basically the same thing. We have a head and shoulder top and a spider. Measurable downside objective was already fulfilled on Monday. Oh my God, it took 2 days for this market to break out to the downside on Friday below the neckline on the head and shoulder top. We have a head and shoulder top first shoulder high with a bearish engulfing on June 20th. Signal. Perfect. did okay, not the greatest. We missed the top, unfortunately, but we did get a buy signal close to the highest high, sell signal, sorry, close to the highest high. But that's the head of the formation. And that is a bearish engulfing, but not a sell signal because it wasn't overbought at the same time or within the last few days of allotted time frame for the signal to work. So no red, but I love those bearish engulfings. Crash. Now what? I think the rally's over. The test of resistance, that is the neckline, probably is come and gone. And we are on the spider with the 6:30 to 1 o'clock California time trading hours, close to the low of the day, where it was 6:30 in the morning when it opened, or actually lower than that. So the 1 minute chart on the spider, yep, opened up here, made the higher high, turned around, and is now making new lows. Now, I'd love to see a bearish engulfing or even softer, weaker, going down more than that. But a bearish engulfing would be great, but I have to get all the way down below 517.90 in order to do the job, which is not out of the question considering volatility has increased dramatically in the last, 5 days or something. Next chart, QQQ, rallied up toward the top of this resistance area, stopped. I think it's about to turn down. I keep mentioning the Qs have tended to lead the way up and down in the market. My opinion, probably the last year or two, and is really becoming slowly but surely my favorite. It takes me years to change because I've been doing this 52, 53 years. As a result, I'm not, I'm a turtle, slow to change, but I win the race. Now, yeah, okay. I think it's going to hit new lows maybe before the end of the week. QQQ 1 minute, new lows for the trading session since 6:30 this morning. And what can I say? Resistance stopping it. Support might hold it, but let's get there first. NASDAQ, we got the top of the market to the exact damn day on the NASDAQ. NQ September contract. The high day is a bearish ER sell signal explanation point. This rally has closed a minor little gap of a few days ago. That's done. There's no other particular reason I can think of for more of a rally except for maybe a test of resistance a little more accurately. But bear markets fall apart much faster, 2 or 3 times, or maybe even faster than that, then a bull market goes up. So watch out, bear moves and bear markets, whether it's a bear market or just simply a downside correction, which I believe this is. This is not a bear market. It's a big correction, and it's way overdue. Look, the last time we had a big correction was actually from the highs in July of last year. Same thing this year, interestingly enough, into October, which is exactly what I expect again. Yeah. Now, the problem I've got with this on the NASDAQ is that it's already on Monday touched my objective to the downside, which I didn't think was going to be reached until October. Yikes. So where are we going in October? I'm not quite sure yet. Maybe substantially under this green zone. Let's figure it out as it develops in advance, of course. Now, NASDAQ, new lows. Next, YM couldn't rally much. Today's high about the same as the previous day, lower than Monday. And Monday was the third big down day, starting on Thursday, then Friday, then Monday. Yeah, we all know why now in retrospect, 2020 hindsight, hey, that doesn't necessarily help you make money. A little maybe. We got the bottom of the market to the exact day, April 19th. We got the top of the rally on April 1st. We got the top of the market to the exact damn day on July 18th. We got the top of the market on the exact rally May 20th. All 3 significant highs for this year so far in the DIA, meaning the YM futures contract. We have bearish engulfing AR sell signals, 100% automated. And we got a major low, as I mentioned, April 19th. Being oversold or close to it, we might have a bullish engulfing. I doubt it. Next chart. YM short-term data coming down fast. We had, past tense, a great trade starting from the high day, got short there, wrote it down, YM, for about a week, got out there. Next, Russell, huge long-term resistance, stopped the rally a couple of weeks ago. Crash, now down to major long-term support to some extent, but it did get oversold. We got the bounce up to resistance, and now it looks like we're leading the way down here. Lower on the day, a little, looking for lower levels. 1 minute RTY, Russell 2000, same story. Bonds. High on Monday, overbought. Kind of a little resistance area, but not very accurately. Tuesday, yesterday, pulled back quite a bit. Today, again, pulling back quite a bit, 32 lower, a point lower on the day. I think it's at least going to come back to about 120, and I cannot rule out 114 ballpark area. I have to point out, bonds, in my opinion, has formed a large head and shoulder bottom. I'm claiming that March of last year is the first shoulder low. Now, I'm not ruling out that October of last year was actually the first shoulder low. But in order to make that work, October of 24 is the head of the formation. There's no doubt about that, period. It's the lowest low. What we're looking for is that symmetry, shoulder on the left, shoulder on the right, about the same amount of time left and right. That's October 22, October 23. October 24 is somewhere right in here, 2 months from now. What happens if we come down, I don't know, 116, 15, 14, 13 into October and then start to go north? I'll scream bloody murder, 2-year head and shoulder bottom, October lows and interest rates again, and redraw the neckline probably across something like that, the high we just made. It might be a pivot point as opposed to this one, which is actually working very well at the moment. And I base it on that low, March 22nd, because if you measure that to the lowest low and then to the right, you get about May 23rd, the end of May. That's okay. It's in the area of a turning point, a bottom. And when you broke the neckline, essentially, a little error there for a few days, it was above then below. But finally, it shot through it like a hot knife through butter, which is classic breakout activity. So I can't help it. We either are still going to form a last shoulder low in 2 months, or it's on its way up. Now, on its way up does not mean you can't come back to the neckline, which does mean you can come back to something like somewhere in the 18 area, 18 and a half or higher, 19. That would not hurt the overall pattern, which has a minimum objective at this point of 139.24. Let's call it 140 flat. I'm long-term bullish on bonds, interest rates. We'll figure out as time passes where the up and down bounces are. I'm decent at calling those. Notes, same story, timing-wise, pattern-wise, timing, everything. Just the numbers vary. And I also got to point out, hey, we had a reasonably good-looking small head and shoulder bottom. October 4th, first shoulder, bottom of the market about October 23rd, last shoulder, November 13th, neckline I drew in blue right there, broke it, rallied, came back, tested, moved up a little bit more, test again, no violations, and up to its minimum upside objective almost exactly on that date, December 14th, done and gone. But now, as the months have passed, that little head and shoulder bottom has turned into the head of a much larger one that's either 2 years and not quite finished yet in size, or year and a half. And the first shoulder low would be March of 22. Nope, I'm sorry, 23. October 23 head. And we have seen already around May, a month before, a month after, right around in there, a couple of month time here, the last shoulder low. Neckline working great, minimum upside objective, maybe it's going to be 6 months from now or more, 120. Next chart, crude. Bounced off a little support. I don't know, a little bit more of a rally. We're actually trying to form something like a pennant formation here. So you're getting caught between a rock and a hard spot, or the hard spot and a rock, whatever. Let's wait for signals and or breakouts. Otherwise, it could bounce back and forth in this range. What about natural gas? That also implies we're going to get some stability, less volatility in some of these other energies. Natural gas doesn't seem to apply very well. We're trending lower consistently, and even a major support area, which was broken way back in November, was tested, failed, made new lows, rallied again toward resistance, formed a little double top, came down a week or so ago, reached my minimum downside objective, and has now gotten oversold. And what the heck, it's only 1 or 2 days ago, bouncing a little. It might come back up to 2310. I'm bearish. I'm looking for places to go short. Heating oil, oversold, bouncing a little, basically the same major story, a little different. We did bounce off of major support when we were oversold a couple days ago. So a little more likely we're going to hit 2.45. But the trend since September of 23, almost a year, has been down. I see we had a great trade here, great sell signal, good trade. Another great trade on a sell signal on the top not long ago, July 5th. Let's come up to resistance at 2.4-ish and then start to eat our way down into the support area. That's what I think is about to happen. Gold, silver, platinum, and we're particularly interested in silver and platinum because of the formations. Now, gold is a big sideways nothing. 1, 2, 3, 4 attempts to continue the trend failed. 3 out of 4 were overbought. 3 out of 4 touched the trend line. Of course, you don't know there's a trend line there until you have the first 2 points. So the third one touched the trend line. Fourth one came pretty close, not quite overbought, turned down, might bounce off at 23.49. Let's wait for some signals or breakouts. I think it's topping out. And if that's true, it's going to break below 23.51 and come down to a minimum of 21.77. But platinum and silver have a well-developed, specifically noticeable, historically very reliable head and shoulder top. My favorite pattern. I have probably seen thousands of these over the 52 or 3 years I've been in this business. Remember, started as a runner in 1971, drawing charts by hand on paper, and the Mercantile Exchange on Franklin Street back then had chalk boards. Only us old guys know that. I think it's about to make new lows, maybe before the end of the week. Crashola. Minimum downside objective, 24.10. Already had our rally back to resistance, the neckline. Did it halfway back up, like I said before, it's going to do it. And now new lows. Probably before the end of the week and maybe even today. Platinum, same story. Oh, yeah. The head and shoulder top in gold has a head and shoulder top as the last shoulder all by itself. And that already worked in a 2-day time frame. Well, 3. Breakout date, July 17, going down 18, got to the minimum objective on the 19th. That's it. Boom, boom, boom. But that kicked in the downside objective for the big pattern on July 19th. Major breakout, bigger pattern. And that is about 2/3 the way it's supposed to go down. Platinum, basically the same story, about the same points in time, absolutely the same patterns, with the head and shoulder inside the head and shoulder as the last shoulder. Amazingly identical. Very, very rare to see this kind of thing happens. I know they're both precious metals. I know they have a relationship between each other, but you still don't see this kind of pattern happening so similarly over this much period of time, hardly ever. I've been watching charts, analyzing them for half a century. So I think it's about to make new lows, break support, minimum objective on the downside, 808. Next, heating oil, copper, H. And it's about to make new lows. What can I say? No specific pattern per se, just heading Tierra del Fuego, probably down to about 3.7. Probably the first time I've come up with a downside objective for this, but I've been bearish for quite a while. Next, almost new lows. We're going with beans, oil, meal, corn, wheat, and then cattle, hogs. Almost new low, bearish long-term for beans, oil, meal, corn, wheat. They all look, except for meal, and I think that's going to look bearish too. All of them look bearish and terribly bearish. I'm sorry to say, I don't see a bottom in sight yet. Next, new lows a few days ago, new lows since May of 23, well over a year ago. Yes, we've got a little support here and there on the way down, but this just looks like it's going to continue to collapse lower and lower. So one support area, 3660. Another one, the last one really of any significant importance, 3315. And I'll draw a line there for you, right off of that bullish engulfing ER buy signal at the bottom of the market. Great. This technique picks major tops and bottoms that are usable for scalping, swing trading, and investing. Next, meal. Come on, baby, we're starting to break down. Good. Overbought a couple days ago, yesterday, at resistance. Okay, worked. I should mention August soybean meal, which is still trading today. I don't know what the last trading day is on that, but it's sometime this month. Did have a bearish engulfing yesterday, and it's down some today, like the September contract here. So I just didn't get an outside down day yesterday, or I would have gotten red also on the September. So looking for a break below the recent lows of 311. Minimum downside objective is 305 or 306. Bearish engulfing on the second high of a double top. You can't ask for more. Oh, yes, you can. You can get a bullish engulfing at the bottom of a bear move. Unfortunately, I don't see very many other great signals in soybean meal. Corn. Bullish engulfing on Monday. Now, this is jeopardizing my positions on this break. Current trade 382.25, near the low of the day, which is 382. Yeah, 1/4 is a tick off the low. Really, 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 I think we actually got hit. Yep. ER3 went long and we're out 84, almost looks like we lost a half a cent. But the ER1 position trade is still in a trade and came very, very close to getting stopped out, probably a tick below today's low. We will have a small loss on that also if it gets hit. This worked out okay, not great. I have the hunch, and that's about it, in the back of my head, that this could end up being a very important bullish engulfing. I would be interested in getting back long again if I get punched out with the strategy. I like the way we're getting a couple of bullish engulfings during what I think could end up being a bottom, but it's not so far. Bullish, not working yet completely. Need a close above the highest high so far, 393 ASAP. Next chart, wheat coming down some 7 cents, but we did have a bullish engulfing so far on the bottom of the market, and that was on July 31st. Now we have made new highs since. Yesterday and today looks like the same high. We're doing well. The trade is working. It has a profitable green trade line, even though we're down 7 cents. We're not stopped out yet. I like what I see. Looking for higher levels, probably up to 583, but I need to close strong real damn soon. Next, cattle. Overbought, came up to resistance, stopped for today's high, turning back down, lower than where it opened, almost unchanged. I think it could make a new low real soon. Probably looking for a minimum of 175, and I'm not ruling out 170. Bearish. Next, hogs may be forming, as I've said. It's not finished by any means. I see these things before they finish. That means I'm at jeopardy to be a little too soon, but I know what to look for. So if you're buying right now at 74.37, 74.42 and a half current tick, put your stop probably below the low 2 days ago of 73.90. Very low risk, but you're taking a chance that this was the last shoulder low on Monday. Still not that big a risk. If you're right, and I think you could be, we're starting to go back up here and have a profitable, if you get in here, trade very soon. And I need a close above 77 and a half, and then the breakout above 78, 75, and then we have a minimum upside objective, which I haven't really measured yet. Let's do it right now. I'm going to take, this low right here, measure the depth of the formation, grab my little measuring stick, and assume, I already did this. Yep, I already did this a couple of days ago. That the minimum upside objective is where my pointer is. How about that? Right at exactly a previous important top, 89.5. Very interesting that the upside objective on this pattern, if it works, is smack dab at a previous resistance important top, which we did have a bearish engulfing at. Well, that's it. What are we doing on the stock indexes? We slipping a little bit more, I hope. We bounced, not too much, and maybe starting our way back down again. Let's look at the NASDAQ. 1 minute again, 5-minute NASDAQ, bounced a little bit. Watch out. I think we're about to have some big down days again. Thanks very much. See you tomorrow. Profitable trading to you.